Hey everybody, welcome to your week in review for the week of Monday, June 12th, 2023. And oh, what a week it was. On Monday, MBS started the day down 23 basis points. Stocks were up 7. Many lenders that were not out early were looking to reprice before everybody had even posted yet. Those that were already considering negative reprices very early this morning, illiquidity was definitely exasperating the move, but there is at least a quarter of a point of weakness from the highs very early in the morning. The week ahead is going to be dominated by the Fed decision, although we do have some important economic data that would move the market even outside of that. Specifically, the consumer price index will be released on Tuesday, and that could impact the Fed decision because they will have that information to bear into that. While the Fed fund futures have a 74% chance of no increase, the markets are interpreting it as a skip and not a stop. The July Fed futures are assigning a 65% chance of a rate hike if nothing happens in June. The dot plot will be critical. At the March meeting, the FOMC largely forecasted that the Fed funds rate would be at the current level, and a few forecasted higher rates. UBS sent a note to its clients expecting a hard landing. With GDP set to contract 1% in the coming quarters, their model sees an 80% recession risk. Tomorrow we do get that CPI report. The market is expecting a headline number of plus 0.2%, which would be replacing a 0.9% from last year. This would make the year-over-year number drop, though that doesn't necessarily make anything cheaper to be alive. The core expected to come in at plus 0.4, replacing plus 0.6 last year. Oil, cars, shelter are expected to come down. Then on Wednesday, we get the producer version, which is the PPI, and the Fed meeting starts tomorrow with the announcement coming on Wednesday. Bonds made it through the overnight session without any major drama, but selling intensified shortly after the 9:30 a.m. New York Stock Exchange open. We have little to blame for the weakness, apart from the general desire to price in a concession ahead of the 3-year and 10-year auctions that happened today. Every bit of that was needed, considering 10 still managed to come in slightly higher in yield versus the when issued target. Without a same supply backdrop to worry about, MBS logically outperformed. Looked at another way, MBS outperformance helps confirm the market's focus on Treasury supply. CPI is out tomorrow. We also get some Fed budget numbers, so we're going to see really how many bonds they're going to have to issue in order to balance the budget. MBS were up 9 basis points on the day. Stocks won by 40 points at 100.08. That is putting us right around, bumping right up on that 25-day moving average. It is the descending red line there. So we'll have to see if we break through that and have some more room to run tomorrow. The CPI number is going to have everything to do with that. In other news over the weekend, we got news that Better.com, everybody's favorite employer, is laying off its real estate team and related shedding of its real estate business. The company declined comment on the move, but one person who wished to remain anonymous, who was affected by the layoffs, told TechCrunch via email on June 8th that at 8 a.m. yesterday, after being praised in Tuesday's meeting, our computers were disconnected and logged out of work emails, no warning. I guess Better.com hasn't learned from its past and hasn't gotten any better at laying people off.